everyone, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Andrew Chanin, who is the co-founder and COO of PureFunds. Andrew, thanks a lot for coming on the show.
Mike, thanks for having me.
Now, I read something, what intrigued me about your company, and we're going to get into it, but you just recently launched an ETF that is a gem ETF. It follows gems, diamond and gemstones. That's fascinating. I don't think there's anything out there like it. Can you tell us a little bit about that?
Certainly. On November 29th, we launched, with the assistance of the International Securities Exchange, a new fund, the PureFunds ISE Diamond Gemstone ETF. And like you said, it's the first one to hit the U.S. It's comprised of companies that are in the mining and exploration of diamonds and gemstones, companies that hold large inventories, and the companies that sell rough or polished stones. So this is giving U.S. investors new exposure to the space. And what
would it track? I mean, how does it trade? Would it track gem prices? Is that the idea behind it?
The
diamond prices?
The producers would most likely track the diamond prices,
right,
while the retail side of it, the people selling the rough and polished stones, would actually give exposure to the frequency of transactions. And in this sector, this industry, we've seen a large growth coming from the new investors in China and India. And as in the U.S., it's very customary to give as gifts and to show love and affection diamonds and gemstones. This is a trend that hadn't yet caught on to the Asian investors.
Put some of these shares right into the stocking around Christmas time, right?
It's not a bad idea.
I don't know if the ladies will go for that, though. I think they like the bling, on the finger. But anyway, it is a very unique idea. Tell us about some of your other funds. I think you have 2 more funds.
Certainly. So we also have another first. It's the Mining Service ETF. The ticker is MSXX. And that as well as with the International Securities Exchange. This fund wanted to do what had already happened in the oil space. In the oil space, you saw a bifurcation between the oil producers and explorers, and on the other side, you had the service side. Now, we want to do the same thing for the mining industry. You already have several producing ETFs, but you had not had a mining service ETF. Now, these companies, we like to consider them as the people selling the picks and the shovels. So as companies in the production side are interested in actually going out and finding new discoveries, what they'll do is they'll need to link up with the different service companies. So these companies will sell equipment or lease equipment. They'll come in and they'll do consulting for these companies. They'll come in and they'll do the new mine build. So give us an example. I mean, you'd probably have like Caterpillar, I'm sure, would be in there. They sell mining equipment. Who else would be included in there? So we've actually excluded Caterpillar from this fund.
No Caterpillar.
There's no Caterpillar exposure.
Big?
It didn't have enough pure play exposure to the mining service industry. We figured that there was too much exposure to home building and infrastructure, but what we wanted to do is give investors as close of a fit to purely mining services as we could. So we've left out the likes of Caterpillar and GE, who actually just formed GE Mining, which is looking to make investments and acquisitions in the mining service sector. And we instead have companies like Joy Global and Terex that you could find listed in the U.S. And we have companies like Atlas Copco, as well as Monadelphous, which is traded in Australia. So there's a very interesting mix of companies and geographic locations. So there's a very heavily weighted portion to Canada as well as Australia.
So the investor gets sort of an extra bang for the buck in that some international diversification. It's not just an investment in one sector, but you also get that international aspect, right?
Exactly, which is very important for this industry, as it would be very difficult to comprise a well-diversified basket of companies just in the U.S., because there aren't many companies in the U.S. that are actually doing that today. So what we also find interesting about a fund such as this is that many people like getting exposure to energy or metals specifically. Now, a fund like this, not only is there exposure to companies that are mining for gold and silver and other precious metals, but you also have the base and industrial side, and you also have exposure to coal and uranium. So you also do see a slight energy kind of play to this. So as demand fades for one, it doesn't necessarily mean that demand for energy mining will also decrease. So lots of these companies that produce equipment and machinery or do consulting have the ability to morph and do other types of activities in the same space.
Gotcha. Now, what is your third fund?
Our third fund is our Junior Silver ETF. It's the PureFunds ISE Junior Silver, Small Cap Miners, and Explorer ETF. So this company is comprised of companies in the US, Australia, very heavily in Canada, and these companies are your smaller producers, if any production, but more so exploration of silver. So as the more major companies have their reserves deplete, these companies can become potentially acquisition targets, as it's easier to take over a company than find a new discovery out there. So lots of ways that people tend to value these companies are by looking at how much it costs for them to get the silver out of the ground and how much potential silver that they have. So these prices of these companies are also very correlated to the actual metal price.
Now you're new. I mean, your funds have only been out there a short time. You had some interesting, unique kind of funds in the gem and the mining service. But I mean, there's been a proliferation of ETFs. There are literally thousands of ETFs, many of them in the mining and commodity hard asset space. How do you differentiate yourself? How do you put yourself out there? Coming on this show, of course, is one great way, which you did. But I mean, how do you get the word out?
Absolutely. It really is right now just reaching out to people that we know are interested in the space. So like you said, coming on shows like this and reaching out to people that are already writing up things about commodities and natural resources is a natural fit to help get the word out. And we're also reaching out to different companies that we know are already interested in this space due to previous investments. Lots of the larger companies, you can see that they hold either competing ETFs or single name companies, which this could provide a different allocation for them. So it really is a grassroots kind of start right now, and we're looking to expand. But as we get the awareness out, we hope that will be very important, being that each of these ETFs are very, very different than what's already out there on the market. If you want to invest in diamonds and gemstones, you're probably looking at, unless you're a super high net wealth investor, you're probably looking at more individual single names. So we want to give diversification to people that are already interested in these spaces.
Now, do you think the recent strength in the stock market, with the Dow Jones reaching new all-time highs, the S&P almost there, do you think that's going to draw away some of the attention from these commodity plays that were so popular and so hot, for the last several years?
I think that the overall trend, and as you see those markets increasing in value, you also see the different aspects that are going on in the economy that are potentially saying maybe we should shift some of these assets into commodities and hard assets.
Well, you want diversification. I think people now, there's a much greater awareness, and the ETFs obviously make it easier for people to achieve that diversification, right? In the past, you had to be maybe a savvy futures player or own the physical cash commodity. The proliferation, the advent of these instruments make it pretty easy for an individual investor to get involved. Gems, for example.
Exactly. And my start in the business was actually trading ETFs, and from that, as opposed to following specific stocks, I kind of learned an appreciation for the macro picture. And I think ETFs are a very interesting way for investors that have more macro and trend following views to actually gain exposure to that space.
Right. Andrew Chanin, thanks very much. PureFunds, the name of the company.
Thanks so much for having me, Mike.
That's it for now, folks. This is Mike Norman saying we'll see you next time. Bye-bye.